Thanks for watching. This video is an introduction to investing, and it's a co-production of Lighthaven Capital and the San Francisco Investors Club. And I'm here with two of my friends, Brenda and Amar, and we're going to talk to you and share some knowledge to get you started on your investing journey. Today, we're going to talk about a few topics. We're going to talk about why investing matters. We'll cover investment types, investment philosophies, what fundamental investing is. The first topic that I think we should talk about is why investing matters. About 20 years ago, I did some very simple math, and it astounded me the difference that I could have at retirement if I, number one, saved consistently, but the additional money I would have if I actually invested it. And without boring you with the actual math, the difference between like a 3 or 4% return versus a 10 or 12% return over a long period of time isn't like double or triple. It's, depending on the time frame, like it could be tenfold, 20-fold, if it's like 30, 40, 50 years. And that's when it really sank in for me. It's like, well, wow, I'm working really hard. That delta, that difference between making, 5% versus 15%, how many years of working would it take me to make that up? Amar, do you have a thought on why investing is important and how you got interested in it?
Yeah. Investing is very important because of inflation. If you don't do anything, you lose your money for inflation. So by investing, you make sure you have enough for your retirement. Not only that, investing really helps you grow your money without having to work for it. What I mean by that is you just sit around and the money grows without you having to do anything. So it's very important that way.
That's a really good point. In fact, people think, well, how could that possibly be? But essentially, when you're investing in a company, you've got a team, a whole company, that's a team of really smart, motivated people who are working hard to grow that company and to make money. And you are essentially being a passive investor, a passenger on that train that's speeding along. How about you, Brenda? Have you thought about why savings and investing matters and how you got interested in investing originally?
I have thought about this. I think what you just said is part of the reason why I think investing is important, is that the companies that you invest in, they're the economic engine kind of that drive the entire world forward. And a lot of people don't really see it because they're not investing and they're not close to business. They maybe are just employees at our company or they have their own business. But I think that the companies that are investable companies, these companies influence a lot of the outcomes that actually happen in the world. I think that's not immediately evident. The other reason I got into investing was actually a little bit selfish, was because the people who I think of as people who get to invest are people who are very wealthy. They have access to a lot of information that the majority of people don't actually have access to. And I was like, hey, how come these people get to invest and I don't, So it was a little selfish in that I wanted to be like these people, but at the same time, I also was like, oh, there's a little bit of an inequity in the system that, why don't the little guys know how to do investing, and the people who have all the resources do know.
It's a really good point, and that actually resonates with me a lot. You and I both love the book One Up on Wall Street by Peter Lynch, who's a famous mutual fund manager. If you haven't read the book, I'd recommend it. One Up on Wall Street is great on many levels, but one of the key messages in that book is that you don't have to be a professional investor. You don't have to be like the smartest guy in the room to make money in the stock market. And in fact, in the book, his thesis is that often the professional investors are actually handicapped, and that if an ordinary person puts in the time and the effort, that they can do almost as well or better. Actually, he makes the case that you could do better than the professional. I think anybody can do it, but I don't want to make it sound like investing is easy or it's riskless. I really do think that you have to put in the homework. You have to know what you're doing. Amar, do you have a a thought about that, like the level of diligence and the amount of time that you put into it? And what would you recommend for a new investor?
For a new investor, I would actually recommend something like an index fund. It is a very good place to get started, to have the exposure without all the worries that comes with it. But you could set aside a small portion of your portfolio, like say 5 or 10%, and use that to actually pick stocks, do stock investing on companies that you know and understand well. In this case, like, it would be good to still understand some of the financials, as in what do they sell, how much money do they make, etc. But you can just stay at that level to get comfortable with it before you delve deeper.
That's a good point. Yeah. Brenda, how about you? How much time do you think that people should spend on investing? And also, do you have any, like earlier I was saying that investing isn't easy and that you have to pay attention. Do you have a view on that?
How much time should someone spend on choosing an investment? I think that depends. If you're going the index fund method, not much time, right? Your goal is going to be extremely long term, and index funds, there's not much selection between the few that you can pick. So that one, I think, very minimal amount of time, probably just looking at what the fees are for those index funds and making the decision that's best for you. If you're picking an individual stock, you're going to have to spend a decent amount of time combing through the financial health of the company, understanding the market that the company plays in and how big it is, understanding like why this company would grow in a way that will make its stock price appreciate so that you can make a return. So for my own investing, I maybe spend several weeks looking at a company, maybe 3 to 4 weeks looking at a company before I make a decision. And within those weeks, if I'm doing deep work where I'm actually scanning financial statements, doing online research, it will be, let's say, 2 hours a day over several weeks. And then on top of that, you spend a lot of time thinking, building mental models in your head, and that also takes up a lot of that time. So it really depends on what you're investing in, and it's not easy by any means.
I have spent literally months researching a company, and I think for investing, you absolutely need to do enough research, but there is a point in time where if you could spend an infinite amount of time on any company and you're not going to get like the commensurate benefit from that.
One thing I will add to that is it depends on your style of investment and how much your turnover is. Because if you are picking, say, 1 or 2 companies a year, you can spend lots of time. But if you are somebody who has, picks and sells multiple companies in a given year, then you don't want to spend as much time. And I think the even more important thing is having a higher level mental framework on what is acceptable to you as an investment and what is not. So you are not spending inordinate amount of time on each company that you come across.
That's a good point. Well, let's wrap it up for today's episode. On the next episode, we're going to talk about asset types, and we're going to cover a bunch of other topics that'll be of interest. Again, our goal is to demystify investing. So please watch our next video, and thanks for watching this one. Take care.